All right, good morning, everyone. Sorry for the late start. Technical difficulties here. All right, let's kick it off. All right, U.S. stocks traded incredibly well in yesterday's session. Wasn't very much volume there, but you can see across the board in all sectors we're really up on the day. Data, again, wasn't amazing. We had personal income and pending home sales that were a slight beat on expectations, but then personal spending and Dallas Fed were misses. So, we're not shooting the lights out in terms of the data that's been released, but markets continue to just grind higher. Yesterday we traded, I think intraday on the tops there you can see we traded to within a couple 1 point of an all-time high, and then we closed right on the number of an all-time high. In fact, we did close on an all-time high technically, but at this point I think it still could potentially look a little bit double topish, if we were to pull back, because we didn't break out at all. So I think today is going to be really the day to watch. I mean, I don't know of any reason why we can't punch through today. But the data just hasn't been there. It's been really surprising to me that markets have been able to really rally into this time. And I think that it's really interesting also that we're going into the month of May, which you guys all know the key phrase, that may play itself out again. All right, in Asia, we saw commodity currencies that were a little bit up on the day. The yen still struggling to weaken a whole lot more. We did get 3 good data points out of Japan, which are really the first good ones that we've had forever. So I think that's really important, maybe showing that some of this stimulus is starting to work a little bit. And we just see commodity prices today that are starting to pull back a little bit off of the highs. The Chinese markets are closed for Labor Day celebrations, but you can see there in Asia and on the Nikkei, most of the sectors were up on the day. Said no volume. Okay, so all right, so jumping into the corporate action, we had Newmont that was a miss on the EPS, and also a miss on revenue numbers. I mean, we've been seeing the gold shares across the board, across the world, that have been killed really. So I think that's going to be something to keep an eye on, these gold shares, see if they can actually make a balance. I mean, we've pushed up $150 off the lows on the spot gold price. Our gold shares are really probably 2-3% off of the lows, so and some of them less than that. So I think it's kind of telling us that maybe this gold price isn't going to make it on this bounce. Later we also had UBS that was out earlier, which was a beat on expectations, 988 million versus 412. Not sure if there are any once-offs there, but we also have AB InBev that came out with a miss on EBITDA numbers, and quite a reasonable miss. So I think watching SA Breweries on the back of that might be something to do today. And then later we've got Pfizer in the U.S. before we open. PPC had its first half trading statement earlier. Headline earnings per share decreased, saying between 20 and 22%. Expectations were for up 25%. I'm not sure if there are any special one-offs among that, but I would assume that there would be. And then this morning, Standard Bank recommended buying the dollar into rand strength on current account deficit concerns and about growth in export markets. So this is the second day in a row we've had that call that's come out. Yesterday it was I think Credit Suisse. Today we have Standard Bank. Obviously these guys are thinking that we really are going to get rand weakness, and I think yesterday's rand strength was a lot due to commodity prices running, especially platinum and gold. So something to keep an eye on. I'll actually show that as the first chart in just a second, but let's just have a look here quickly at what we have for data points today. We had, like I said earlier, we had some good data points out of Japan, but then we have had this morning, we had the German consumer confidence, which is better than expected. We had money supply numbers out locally here, which was higher than expected. Private sector credit, which is also higher than expected. Then later we've got unemployment change out of Germany, mortgage apps out of UK, unemployment rate out of the ECB, which I think is going to be important. I think we need to watch that one. Italian CPI at 11, trade balance numbers at 2 here, and then later in the States we've got Chicago PMI and CPI. But I think also very important to note that today is the start of the 2-day FOMC meeting. And, like I said, it's last day of the month today, so just keep all these things in mind. All right, let's jump into the maps real quick. Okay. Well, geez, I already had the chart up, and I wasn't even planning on showing it until now. Okay, so yeah, this is the first one that I want to look at here. This is a 2-year chart, and this is the dollar rand. You can see right here, right around a touch below 890. You can see we're coming up to test trend line support. I'll call it maybe 892. We're coming down to test trend line support. Yesterday we really got to 894, so we more or less got there. You can see, and you can see here how this has been such a. I'll actually even back it up to 5 years here, and you can have a real good look at how we totally turned out into a downtrend in the rand, and we've just been steadily holding these support levels all the way to lower levels for the past couple of years. So something to look out for. I think that we've got to be careful that there's going to be a lot of people probably on the same side of the trade, but maybe not a bad trade nonetheless. Okay, yesterday we sent this one out on Twitter, and in case you guys didn't see. This thing has really not been an easy one to trade, and it kind of was the laggard as of recently in the retail sales numbers. Of the retailers, clothing retailers. You can see here Trueworths broke out yesterday from. I'll shorten it up a little bit so we can see it a little bit better, but you can see how we broke out yesterday above trendline resistance. It's really been the first time we've really been able to pop our head nicely above it on a closing basis. And it outperformed yesterday for the first time in a while, or the last 2 days for the first time in a while. So I think it's significant. I think this thing could have considerable upside on a breakout here. So just watch this one closely. I think it's burnt a lot of people, including myself, but let's watch it nonetheless. I think it could be an opportunity. All right, Impala is also going to show. We talked about this yesterday. Go back a little bit. We talked about this one yesterday, and how it had broken above its trend line. You saw yesterday we got a big gap up yesterday. As we got above this 125 level, we know it was so important. We really managed to spike significantly higher. I'm kind of thinking that, I personally am going to be looking for an area to short this, even though we're breaking out of the downtrend here. But this is really where we broke down from, around 132. That's where things started to get ugly. We had this, we touched off here, and we really put in about almost a whole month of consolidation, moving out to the side here in Impalas before we really broke down. And then we kind of spiked back up in early April to test it before we really broke down. So right around 132, call it just 132. I think it could be a decent little level to maybe enter a short. Also, is the kind of the top end on the Bollinger. So keep an eye on that. Could be a little place to have a nibble on the short side. Like I said, I don't think it's something that you just jump in on at the moment, because there's definitely some momentum to the upside right now. All right, another chart looks identical to that. The platinum sector is Lawnman, which we called this head and shoulders move back in the day. Unfortunately, I couldn't get script to hold it. But that head and shoulders move we called as we broke below 45. We talked about $40 at least being the target price, which we obviously got way lower than that. We got down here to 36. It's really a full completion of the pattern, I think. You could say 33, but from to the bottom of this range right here. And I think that same sort of thing. I think bounces in a lot of these things are probably to be sold. But like I said, I'll be careful on these kind of things. But just note that it has broken out. So in the short term, there could be some upside left in them. It might be a little wiggle room to make a play there. All right, I wanted to show Siboney real quickly, and let me change this up. I'll go to a 30-day. Well, the reason why I want to show that is just this little pattern that we're making here. I mean, we looked at you can look across the board at all the gold shares, and they all had nice bounces kind of off of the bottoms. I think Goldfields traded from 50 odd up to 70. We had Harmony that traded from 42 up to 48.50 or something along those lines. I mean, they all had kind of 10%, 12% bounces across the board. Except for Siboney. Siboney was really a bit of a dead cat here. Hit basically $9. I think we closed a touch below, or traded intraday a touch below. It closed at 9 back in about a week and a half ago, and we spiked up to just north of 950, and I think the close was actually at 950, and we're just rolling back over. And I really think that there's a lot of people long in this thing, and the fact that it hasn't been able to get up, it really, really has been disappointing. And I think you're going to get a lot of guys that potentially could get run out here if we were to see a drop to new lows below 894. So keep that in mind. This one really kind of starting to stink a little bit. The fact that it couldn't bounce at all, I think is really negative. And just be really careful of that one if you do have a long in it. All right, I'm going to show last South African one I'll show here is Tiger Brands. And we had talked about this before. I just want to show this because we're really pushing up against trendline resistance here, and I'm not. This is obviously not. It's not a bullish-looking chart here, but we're starting to push out to the right, and I think if we were to move higher than 280, then I think that we're out of this downtrend for the time being. And I think the shorts need to cover there. So it's one to keep an eye on over the next couple sessions. All right, and the last couple I'll show are actually both U.S. listings. I'm going to show good old Apple, and I'll show here same sort of thing. We're seeing a lot of charts that are starting to look like this. A lot of these stocks that have been in the downtrend are starting to bounce up. And you can see there yesterday we really ripped hard through resistance on the trend line yesterday, and I really have a feeling this one can bounce even more from here. And the reason why I say that is just because, as expected, we had relatively disappointing earnings news out of them here, marking the exact day of the low, which is about 5 or 6 sessions ago. And we literally turned up the next day, and that first big green bar after that is the day after their earnings. So we actually sold off the morning of earnings, or sorry, the next morning after earnings, and then that same day we had a big reversal. And I think it's really important that we managed to mark lows on that. I think a lot of bad news is in the price, and I think that there could be some significant upside here in Apple. So if you guys are punting overseas, it might not be a bad one to look at. And then last one I'll show here, yeah, that's right, is BBRY. That's the new ticker for BlackBerry in the States. There's some reports out yesterday that BlackBerry, that there's the one store in the UK had sold, was selling something like 2,000 BlackBerries an hour, and then there's another store that sold out in an hour and a half, and so those Q10, the new Q10 phone of theirs. So I think really important. We got some good news here. There's a lot of negativity, obviously, in the price. How long this can last, who knows? But this is actually it's a little bit of a bull flag going back to September that we're setting up. That's been kind of long and protracted. I mean, this thing could have significant room to the upside and definitely could run up close to $20. So I think there could be a lot of meat left on the bone here in BlackBerry. I don't think this is necessarily one to put in your long-term books, but this could be a great little trade over the next couple sessions, and we've just broken out of this bull flag here in BlackBerry. And that's it for today, guys. Thanks a lot.